With markets on a roll, we thought we'll go on a stroll. It's a long weekend and this time we are coming to you from a lovely outdoor location with ace merchant banker Dharmesh Mehta of Axis Capital. Now before I introduce him, let me just set the tone. The tone is that Indian markets are at a record high, global markets are at a record high. This market of late has ignored all the bad news and surely has managed to climb the wall of worry. So where do we go from here? Beginning of good times, or this is as good as it gets? To discuss all that and much more, let's welcome Dharmesh Mehta of Axis Capital. Dharmesh, thank you for inviting us.
Hi Nikunj.
Lovely building, lovely location.
And great sunny weather.
So we thought we'll go for a stroll because markets are on a roll.
Absolutely.
You know, it's a dream run. When we started the year 2017, it was expected to be a dull year. It's
right.
turning out to be a dream year.
That's right.
The macro hasn't changed, the micro hasn't changed, but commitment levels have changed.
Well, if you look at the confidence is back. I think so. What happened in the December quarter because of demonetization, people were not sure what's going to happen to the economy, what's going to happen to the businesses, and how this whole will play out. In fact, all of us were proven wrong. The way the India has come back, especially Indians, which have adopted this entire demonetization process, was outstanding. And I believe that surprise has led to this rally, because suddenly you get all this currency which was parked in all by housewives in their drawing boards or on the closets has come out in the banks, and the entire country is flush with liquidity. So I believe it's part of that impact also by which the markets have gone up, and the speed breaker which had come in on the earnings side or the growth story, which India was very well placed at, is now playing out.
So is this a extension of Trump rally? Is this a liquidity rally? Or this is a market's way of telling you that a fresh earning cycle is about to start? Because historically we've seen that when earning cycles start, markets will always look expensive and then earnings they catch up.
Yeah, so this is part of a global rally, so I cannot deny it. If you look at all the markets globally, India may have outperformed a little bit more because we had gone down much more. But yes, it's a part of the global rally. But yes, there is hope now that we pass through the tough phase, and hopefully the earnings will pick up in the next 1 or 2 years. And when the earnings pick up, and India, the way it's placed today in the global world, is the most safe bet and the most defensive bet, and you can get growth. So all the investors are looking at that kind of a long-term view. Nobody's buying India today for a 6-month view or a 3-month view. Anybody who's buying India today should be buying us for a 3 to 5 year view. And 3 to 5 year view, this is the opportunity you get to get those stocks, which may become more expensive than they are when today, because the earnings will catch up eventually. And that's when you will see the big rally. I think so. We're just in the beginning of a big rally. It's not happened yet.
So you don't think there's any froth in the market?
I can't see any froth in the market. Valuations are expensive, but then you are not going to get it cheap, because all the hurdles which we all were worried about are now almost over. The demonetization is over. GST is going to be implemented anytime soon. Insurance bills have passed. A lot of bills have actually cleared in the parliament. So the wish list is actually getting lower and lower. Now the only thing what we need to see is the animal spirit coming back, and the private sector starts investing in a big way. And once that happens, then you will see the crust of a big rally.
Now when we rolled over from Q3 to Q4, the expectations from Q3 numbers were very poor. Ordinary numbers also looked good. This time it's the other end of the spectrum. Expectations are high and good numbers may also not look great. So are we in for an earning, not in disappointment, but are we in for pedestrian set of numbers which may trigger a sell-off in the market?
I wouldn't believe the earnings will trigger a sell-off, because people know this. I don't believe today people are buying thinking the earnings in this quarter and on will be very great. I believe people think that 6 months down the line, the closer to the year end, is when the earnings will start picking up, and people have already buying on the hopes of FY19, not FY18. So I won't be markets will be disappointed, but clearly if there is a global meltdown or some global scare, we also will get impacted. But Nikunj, don't forget, though we are seeing foreign flows which are coming in, this time the difference is there are more passive funds which are coming in rather than active funds, which is a global phenomenon right now. So the passive funds don't have any emotions or sentiments. They'll go as soon as people see that there is some kind of nervousness in the emerging markets or India. So you will see some kind of fund flow, outflow coming if you see some kind of impact globally.
How does one figure that out?
Well, wait and watch. I don't believe there's any way to figure it out, but are you buying fundamentally good stocks which can withhold that kind of a fall when it happens and gives you an opportunity to buy more? If you're able to see that and you can see the earnings 3 to 5 years down the line, those are the stocks which people should actually be invested in. Because yes, the easy hanging fruit is out. Now it's going to be really tough to make money. 2017 was a great year for investors who make money, but to think that you're going to make the same kind of returns this year is going to be wishful thinking. people should be happy with 20-30% return. I believe that should be also a great one if it happens.
So now, if the earning expectations are anywhere in the range of about 15 to 20%, I mean charitable here when I say the word 20, the realistic number is actually going to be way below 20. Markets have already seen a run up of about 14-15% in dollar terms.
Yeah.
So can I say that the best of the gains for this calendar year technically are behind us? What happens now is going to be an extension, and that will be the overbought part.
I wouldn't say for the calendar year, because as I said, earnings can surprise people in maybe 1 or 2 quarters down the line, and all the fears of NPAs, banking issues, power. If if government is able to come out with good schemes which they are already trying, that can actually surprise. So there is one earning surprise I believe still left in this year, where people are expecting lower earnings, and it may surprise the market.
Now you the merchant bankers instrumental behind taking DMart public.
Sure.
I'm sure the current price is even trading beyond your wildest imaginations. When you took public, it was at sub 300.
Yeah.
Now it almost touched 800, I think, last Thursday.
That's right.
What explains this euphoria? Demand supply equation, or the fact that this company is owned by a great investor, Radhakishan Damani?
It's a mix of everything. But if I look at it, when you're comparing this company, I don't like to talk specific, just to clear this whole froth which people have built on DMart. The fact is that it's one of the best managed retail companies. People are dying to buy retail companies in India with high quality management and good business model which they have. And when we are comparing valuations, today's date markets are giving multinational that valuation. A lot of companies, the e-commerce companies which are in similar business, are getting crazy valuations. As you see in the last round, was valued at $10 billion, where it's not making profit, while DMart makes those kind of profits today, and there's real estate in. So it's expensive, but anytime it falls, people will be waiting to buy it rather than sell it. And yes, most importantly, it's been run very well. The business model is great, and it's a play on Indian consumption. You can't get a better play than this, and that's what market was waiting for. And there will be some froth, for some time, but then every fall will be an opportunity to buy there, is what I understand.
But the other companies which you've taken public, whether it's Quest Corp or the smaller issues, the return post listing has been good. Now when companies have gone public, and when financial commentators like me, we look at the traditional way of looking at companies, P multiple, book to value, it's not been a very convincing scenario. Yet stocks have gone public and they've given a handsome return even after they've gone public.
Well, just to correct, it's not handsome return. At least the deals which we had in the IPOs in the last 1 year, they're given almost 80% return on an average. Now that's not handsome, that's I believe a fabulous return, and people should not expect that the new companies will come will give them that kind of a return. If they get it, they're very lucky. But those are high quality companies. They were valued correctly, and there's enough left on the table. And when the earnings catch up, so that's why I'm saying you're not buying today this market for current year earnings. You're actually discounting 1 or 2 years ahead. And if you're getting good, more solid management, solid businesses, you don't mind sitting over them for 1 or 2 years, which may underperform, if at all, and making the most when it actually starts delivering the earnings.
One realization which has sort of dawned on me in the last bull market was that IPOs are the first indicator of froth and bubble in the market.
Sure.
The IPOs which are the IPO activity, I'm not saying there's a bubble in the market, but it is not. It is big. It is getting bigger and grander. Participation levels are very high. So you don't think the excitement or the action in the IPO market is a telltale sign that we are nearing a peak, if not at the peak?
I always say this, people always say that this time is different, which everybody says it's a very, but it is really different, because ever in our life, we have never seen this kind of demonetization impact coming in, that the money which was sparked from last 30, 40, 50 years was sparking closets have come to the banks, and there's enough liquidity in the system. And now that it is in official domain, people want to make some return out of it, which was not making any return in the last 50 years. And if you look at the other asset classes like real estate, gold, or any other real, debt, or even fixed deposits, they're not giving you this kind of return which you want. So that kind of money is now getting into the IPOs and equity markets. So I wouldn't say that there is a froth out there, because if you look at it, the companies have delivered the returns, and we are valuing it correctly. The day when you see the valuation go crazy, look at DMart IPO happened at 300 rupees, which was a very good valuation, and that's why you're seeing these kind of handsome returns. So as far as we are managing to price them correctly, I think there is enough appetite in the market. And yes, this year there will be a lot of supply coming in, but then markets are waiting for the supply.
Would you say the game-changing moment is actually, or the game-changing phenomenon is the SIP culture? For the longest time we look at the FI activity and then judge the market depth.
Sure.
What FIs have done has influenced the market, but that's passe now.
Right.
If I look at the DI versus FI activity, FIs have been selling and DIs have been buying. And I've been told that it's a problem of abundance for DI because they're getting more money and they're running out of ideas.
Absolutely. So that's what I'm saying. The liquidity is actually driving it. But eventually valuations have to catch up, the earnings have to catch up. So unless and until I don't see this converting into earnings, all this liquidity driven rally may fizzle out. So really, end of the day, you will like to have the earnings coming up, and which looks like now that in next 6 to 12 months, you will see earnings catching up also.
Let me use a very common Hindi cliche which we use in stock markets. Kya lagta hai?
Well, technically,
kya lagta hai?
Overall, if it's sentimentally and as an Indian, I'm very, very bullish. But to pick stocks right now is a tough thing. So I would like to lower my expectation on the return and try to pick good quality management, good quality businesses which can survive any global turmoil or any kind of valuation eases out or some disappointments on the earnings. I should be able to sleep on those stocks for another 1 or 2 years and then make the money which I'm intending to do.
Okay, I'll tell you what, we'll take a break right now. A quick one. When we come back, we've spoken about the primary market, the IPO market. We'll talk about the listed market. Where are attractive valuations in this market? If an earnings surprise is coming, which are some of the pockets where the earnings surprise could kick in? Investing in market is all about not analyzing past, it is about betting on the future. So future is looking bright. How can really one identify those bright pockets, invest in them and make money? More on that when we come back. In conversation with Dharmesh Mehta of Axis Capital. Dharmesh, we've spoken about excitement, maybe euphoria, but good days for IPO markets are there. Now let's turn inward and talk about the listed market. You said that buy for next 2 or 3 years, but let's assume that somebody is a genuine investor, is not looking at days or weeks, is counting years, 2 or 3 years. What do you think will make money next 2 or 3 years?
I say, because I said the liquidity drive which has come in, any story which is India consumption will do very well. So anything which is where India is buying, consuming, that I think is the sector which I look at. The export market globally is nervous, as you have seen a lot of announcements by Mr. Trump and what is going to happen in the Eurozone, where nobody knows post-Brexit. So that's why anything which is being consumed in India is what I will be looking at. And that's why those stocks have already run up and they're getting this kind of rich valuation.
But you can't buy consumer staples, even though it's consumption. They're expensive. You
Sure.
can't buy private banks now because price to books are very, very stretched.
Sure.
So consumer is the broad bedrock.
Sure.
But within consumers, lot will change in the way how we will consume. What is your understanding?
See, but every private sector bank is also not expensive, and even PSU banks are there. But even today, I'm getting good quality private sector banks, which may be more expensive than what I want to be, but I would rather buy them. And as I said, it's very important right now for me to buy those stocks where I can sleep over them for next 2 to 3 years. And those kind of banks and those companies can actually give me a lot of comfort if something goes wrong globally and markets collapse. So I would rather be in those high quality names, little expensive, but on a 3 years, the earnings will catch up, because the one sector which has benefited the most with this extra liquidity is the banking sector.
So if you have to construct a portfolio, buy one of the large private banks and keep it for 3 or 4
I
years.
would buy 2 of them or maybe 3 of them also and keep it.
Would you buy anything from large cap IT?
IT, I would definitely look at buying, because see, today there is whole nervousness around IT, on what's going to happen globally on outsourcing, but also understand that the IT sector is now moving places. You're going to get artificial intelligence coming in, a lot of technology disruptions are happening. All those sectors will need servicing, and I believe India is really geared up to take that opportunity, and those margins at the initial stages will be really high. So I'm looking into those IT companies which actually will be suppliers to those new technologies and be the guys who will be servicing those kind of products, and those are the companies I look at. So I wouldn't say IT sector as a whole, but definitely some of those stocks, the valuations are really attractive. The companies are sitting on cash, so it's a classic story. I remember maybe 1.5 years back, nobody wanted to buy any metal stock, and I remember I made a very large conglomerate, and the stocks were in the single digits or double digits, and now they're almost 3 baggers and 4 baggers, and there was humongous bearishness on the metal sector globally. So I wouldn't go by the current kind of downturn. In fact, those with the opportunities go and buy those high quality stocks and sit over them. Is it going up tomorrow? No, but maybe in 1 or 2 years down the line, you may really get a good return on this investment.
With that logic, would you buy telecom also, because it cannot get worse than this?
Telecom, yes, but telecom is still going through the disruption phase, and there's still going to be a price war. So that's why people have played telecom through Reliance, because they're getting some comfort from the other business, and as far as you're still in this disruption phase, you can still value the company better because the other businesses are giving you a lot of money. But yes, I will be looking to buy into telecoms, and when the time comes, why not? Because the data consumption, we have spoken this earlier also, I'm very bullish on data and overall media and all the consumption story in India. That's going to be the key driver for India now, and with all this digitalization push, that sector should benefit the most, and telecom obviously will benefit the most.
Now, in markets, courses remain the same, horses they change. Today,
Right.
what we are looking at gainers is a combination of metal and real estate. If I
Right.
stretch the timeline, it is a combination of maybe a little bit of consumer and a lot of private banks. If I stretch the timeline further, you will find a mention of IT and pharma as well,
That's
depending on the timeline you track. Next 3 years, when we would be analyzing our list of gainers and losers, how do you think the leadership will change? Which sector will throw up outside gainers?
I will be betting on young India now. If I see, I like to go into companies where you've seen the generation next coming in. I believe they will change the entire outlook of the companies which they are today and the current business environment. So I will be identifying those companies where you already seen the young generation coming in.
Bajaj Auto, that's what you call it.
So many of them. I'd not like to name one or two, but I can see the generation next, which is much more updated on technology and much more open to change, and will not be dependent on government policies and reforms to actually make a business model. I believe those kind of companies will really do well, and luckily for India, you can see so many of them. So in fact, that gives me a lot of bullishness that for the next generation, which has come up now, the next 2 decades for India, I think India's story will be very, very good.
Why are PSU stocks in general doing exceptionally well? Suddenly, everybody is talking about a trigger. BML, there's a strategic sale. EIL is doing a buyback. There are some companies which are giving a fat dividend. Is there money to be made in PSUs in general?
Yes, for sure, because you've seen those, even the PSUs are being run much better than earlier. The valuations are at that time very, very attractive. So obviously they were at a very throwaway valuations, and business models are changing. Even PSUs are adopting the new technology changes. So if you look at PSU banks, they have adopted technology, right? So even their cost model is coming down. So I wouldn't say just because PSUs you don't buy, go into individual stocks. Now look at a lot of PSUs, you're going to get this huge opportunity of infrastructure, defense. A lot of things are yet to happen in India. So the bullish part over India is a lot of things are yet to happen. Though despite we are happy that many of our wish list is fulfilled, but I would say it's a half glass full, half glass empty. And majority of that projects will actually be the PSUs who will be doing it. Look at power sector, look at NTPC, how they have done. So I would say a lot of these benefits will come to PSU. So there is nothing that in a stock market I believe is not a buy. Everything is a good buy at a valuation and subject to the business runs well.
Of course, in any point in time, there's always a bull market somewhere, there's a bear market somewhere. But I want to draw your attention back to the market psychology.
Sure.
Big gains are made when there is stress.
Right.
I don't think there is big stress in any of the large sectors with an exception of real estate or even telecom, right?
And some banks.
And some banks. Big bargains are made when you have panic in the market. There is no panic in the market. So it's like saying bull markets, they climb the wall of worry, they come down on the ray of hope and participation. And I just get a sense that right now there is a lot of hope and a lot of participation.
Yeah, but Nikunj, I should not be looking at the market expecting a big return. I can
That's
understand
a
why
fair
people
point.
still think that I should make 90%, 100%, 200%. I believe that phase is gone. So in a bull market, there are early phases where you make that kind of money. The next phase is when it stabilizes. We are in that stabilization phase where if you're lucky, if you make 20-30% return, that's what you should be targeting. You should not be targeting that 100%, 200% kind of a return. I believe that's not going to happen. It's tough.
So we always say that a market has 4 cycles: the best period, the boom period, the bubble period, and the bust period.
That's right.
So the best period is behind us.
That's definitely
Now is the
true.
boom period.
I believe we're starting out the boom period. It's not boom because I said the earnings are yet to come in. So we are starting out the boom period. We are nowhere close to any bubble because we can't see those kind of crazy things. Even where the valuations are rich, there is a business model by which people are able to give them that valuation. It's not like there's no business and you're given some crazy valuation. So we are nowhere close to any of the bubble, because I was there in a lot of earlier bubbles. I don't believe we are
Why do
anywhere
you say
close to
that?
that. Because you can see the business which have been valued richly, they have actually genuinely a good business. The balance sheets are neat and clean, they are not debt heavy, and there is genuine consumption for those products which they are making. Unlike earlier times, there used to be, there's a value for hope, means there's a P to hope. We are not P to vision or P to hope right now.
There's still earnings which is there, underlying earnings are there.
And the balance sheets are in a good shape for those businesses. They're not debt heavy. And there's cash on balance sheet also. So there are a lot of other comforts which you know that if something goes wrong, the company will sail through that phase.
So let's talk about the next big wave, the next big thing. You know, if somebody looks at the profit of Reliance in 1990s, it was not even 100 crores.
That's right.
Today the quarterly profit is about 6 to 7,000 crores. Similar story can be weaved out for Infosys and HUL. For someone who's ready to, let's say, bet on decades, I'm not even looking at months, days, years now. I'm looking at decades, 2017 to 2025, 2027. What could be that big thing? Because the world, Dharmesh, around us is going to change.
Yeah.
If I look at the Sensex composition between 1980 and 2017, hardly 3 or 4 companies have survived.
As I said, the big change which you're going to get is the company which will mean a technology disruption. Whatever is disruptive, I believe that will be the big gainer.
But
we didn't have
difficult to fathom
Ubers
right now, right?
I'm sorry?
Difficult to fathom which will
Yeah,
be that
that's
big
why
company.
people playing so many bets, saying that, okay, I can't bet on one, I'm going to bet on 10 or 15 of those businesses. And they're high risk also. So it's not as if everything will do well and you may have some businesses going bust. But Ubers were not there in our life earlier, right? Uber is born in front of us, and so Netflix is born in front of us. India will have their Uber and India will have their Netflix. So I'll be rather betting on those companies where I know that there is humongous consumption and Indians have not been able to play that.
Okay.
I believe media will be one of that play, because the way media is now shaping up with the digitalization, that can give you that kind of a unseen amount of profit which you have never seen. Because the consumers are there. It's just that the distribution reach wasn't there. Now you're going to see that. So I'll rather go and select those kind of businesses where I know, though they're high risk, but if they go right, the returns can be unbelievable.
So media, data consumption, these
Absolutely.
are the new areas.
Digitalization, I believe, is the key thing, really for a 5 or 10 year story, because people don't know Indians and how much we consume. And I believe that can shock people. Like, I've started using the 4G and the high speed fiber. I was shocked to see what data I consume once I started getting that facility and the infrastructure to have that speed.
Once the ease is easy, of course your pattern and your habits, they change.
Absolutely.
Great point. So the other end of the spectrum, I'm sure some of your clients would also ask you, Dharmesh, let's not talk years, let's talk months and quarters. There's always a cyclical trade, there's always a tactical trade in this market, long or short. What would that trade be?
I believe we are not into a short-term recommendation kind of thing, so I don't know how to do that, because I'm not a great guy.
Like metals was a clear tactical trade last year.
Yeah, but when metal last year also, I remember when we were talking about metals, people were giving me all the kind of yarn which is saying global problem, no growth, and Trump issues, whatever it was. Everything changed as soon as Mr. Donald Trump came, and in demonetization also, including me, we were very nervous. So everything changes overnight. Today's date, as I'm saying, I will be more defensive, because I know that the best phase is out of the way and there's going to be some stabilization. I'd rather go to high quality stocks, large caps, maybe make lesser returns, and selective mid caps, which we know for sure, but knowing that there's going to be high risk in this game. So go and buy those names. And Nikunj, sometimes people don't have to make money. It's not necessary that money has to make money. Sometimes you just sit aside and, okay, let somebody else enjoy the rally.
So next 6-8 months markets can just do nothing, and one should be prepared for that.
Yeah, unless I said earning swings, and that can shock the market.
You don't see a 15-20% downside coming for the market.
Unless there's some global meltdown
Based
for
on
some
fundamentals.
reason.
What we
Fundamentals
don't know,
doesn't
we
look
can't
like.
discuss.
Yeah, but saying, look at interest rate environment. It's not going up. Now, as I said, unless oil moves up substantially, in a very significant manner, which doesn't look like today. So if all those kind of things don't happen, I think that we are in a very safe environment. But yes, it's not easy to make money now, especially in the stocks which are valued today so richly.
So it's no longer green light for markets, but it is certainly not red light. We are somewhere between amber and green.
Somewhere between, I would say, amber and green. That's true.
Amber and green. It's not red according to you.
No chance.
So the best of the gains are yet to come.
I believe so.
Best of the IPOs?
Look at this year. Obviously, some of them I can't share, but the kind of paper which I'm seeing is still very high quality. You're going to get the best of the names, corporates coming in to raise money, which has not happened. Last year, we are all new companies. This year, you're going to have established corporate houses coming and raising money in their individual businesses. I'll be dying to buy those names, and you can see the excitement already. So it's not that kind of issue. But as I said, if we keep the discipline on the valuation, there's enough money to be made.
Small cap versus large cap?
Currently, large cap.
IT versus pharma?
Both.
Okay, we leave it there. Thank you for having us here.
Thank you.
And enjoy a lovely weekend, and it's a long weekend this time. Thank you for tuning in, and thank you for watching this edition of Market Makers.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/etnow.